SoFi stock closed today at $9.82 per share, down 4.3%. But what is also very interesting is that the option flow sentiment was 95% positive from institutional investors. 7 orders totaling $3.91 million. So it looks like SoFi is going to be due for a bounce once the fear and uncertainty is out of the marketplace. And that's what we're going to get into here in this video, my projections for earnings. But most importantly, we have two major catalysts tomorrow. One is going to be economic data known as PCE. This is the core inflation metric that the Federal Reserve pays attention to, and then a slew of other data coming out at the same exact time. That is at 8:30 a.m. That is going to move the markets big. But as well as that, everybody is saying, multiple countries are saying within the next 24 hours, Russia is going to invade Ukraine. So if both of these are negative and bearish, expect the stock market to take a big hit, and this is a golden opportunity for you to load the boat. But more on this and much more later into this video. In the meantime, before we get into it, hit the like button for me, subscribe to the channel, and make sure to comment down below what do you guys think about this information. As well as that, get yourself some free stock, link down below in the description. With Moomoo, Webull, and Public signing up for any of those brokerages will give you in between 1 and 5 free shares. Not a bad time to get yourself some free money in this turbulent market. So let's dive into this information. First and foremost, with the Russia-Ukraine tensions that are brewing and what the world is saying, essentially, because that's why the markets were down so much today. The markets closing down: S&P 500 down 1.84%, Dow Jones Industrial Average down 1.38%, and the Nasdaq down 2.57%. Small caps, Russell 2000 down not as much as the S&P 500, which is interesting. And the reason that is because a lot of the Russell 2000 stocks are already down so much. It's a lot harder to beat or kill a dead dog when it's already killed, and that's what they've done to these stocks. So as the fear sets in, a lot of that selling is going to be concentrated in a lot of the stocks that have not yet reacted, including Apple, that is still positive over the last 3 months, that really has not felt a lot of the pain. Compare this chart to something, and we'll actually take the Bollinger Bands away. Compare this chart to SoFi, and it's a completely different story, right? So the Russell 2000, they've got beaten down a lot more, and they did as well close down 1.82%. A lot of this volatility, uncertainty, fear, and doubt is because of this data that is coming out tomorrow, as well as all of this we're going to get into right now. So Russia is now, in quote, at a state of readiness where they could attack at any time, end quote. Pentagon spokesperson says. And we've also sanctioned, Nord Stream 2. We've sanctioned a lot of things as well today, where we'll get more clarification on exactly what they did sanction later on throughout the rest of the day. But essentially, a lot of this drama back and forth. So keep that in mind. That's going to be the big fear catalyst until the Fed actually does come give their statements and speeches to the markets. That's March 16th, but the key inflation metric actually comes out tomorrow. And why is that so important? That's going to change the rate hike expectations. If the PCE prices quarter over quarter and core PCE prices quarter over quarter as well come out higher than expected, markets are going to start pricing in more rate hikes, and we'll talk about that in just 1 second. But for those of you guys that don't know what PCE actually means, it is a measure of the prices that people living in the United States or those buying on their behalf pay for goods and services. The PCE price index is known for capturing inflation or deflation across a wide range of consumer expenses and reflecting changes in consumer behavior. This is more important in the Fed's eyes than even CPI. So that comes out 8:30 in the morning. As well as that, you do have the retail consumer spending, GDP sales quarter over quarter, continuing jobless claims, initial jobless claims, GDP price index quarter over quarter, and the GDP growth rate quarter over quarter. So all of these are very important. You also do have new home sales in January, for January at 10 a.m. And most of this data that I just went over with you guys comes out at 8:30 a.m. So it's a lot for the markets to react to. And given the Russia-Ukraine situation, if that does escalate over the night tonight, you could be setting up for a very red day tomorrow or a substantial bounce. If PCE comes in lower than expected, I would think that would cause a market bounce. The Russia-Ukraine dramas and fears might weigh out some of that potential positivity by a lower PCE number coming out. But still, it's good to know these things. But as far as the SPY, the S&P 500 is concerned, you can see that we close at a very important level, around 420. We actually close at $421.95 for the S&P 500. That is right at the support level. And if we do have a red day tomorrow, we're going to break under that. We're going to flush substantially down lower than that. Would not surprise me to go to that 410 mark. As far as the PCE and how that does influence markets and how that would move things around is the expectations for rate hikes going forward. So 0.25%, 66.3% of market participants expect that 0.25%. As far as 0.5%, 33.7% of market participants expect a 0.5% rate hike. So if you do see high PC numbers, you're going to see those rate hike expectations for 0.5% going up. That is going to translate into a more bearish market. Even as far as yesterday, we were sitting at about 70.2% of investors thought we were going to see a 0.25%. Now we're at 66.3%. So you're seeing this, difference closing. And the more this top line goes up, to make that very short and sweet, the more fearful the markets will become. So crash course in macroeconomics right there, and why tomorrow is so important. As far as the actual SoFi specific data, like I said, 7 orders totaling $3.91 million, 95% positive order value. You can see 2023, $20 strike calls, 1,300 of these purchased right here at $1.02 per contract, $102 a piece, $135,000 order right there. Here you go, March 4th, $10 call, which that's not in the money right now. They pay $96 a piece. That's a $400,000 trade. These are whales that are trading SoFi stock. These are not smaller individuals, smaller liquidity net worth individuals. They are institutions like hedge funds. And that is actually very surprising. Their break even on this trade alone is $10.96 per share. So they're going to have to see the stock move up about $1 to actually break even on that $400,000 trade. So very interesting right there. I was kind of surprised given the fact we were down as much as we were today. What I say, 4.23%, to see 95% positive order value is not something you even see on something like Apple. Take a look at Apple. We'll go over that briefly to compare these. The options, 66% positive order value. So substantially higher on SoFi than even the next best stock in, really the best stock in investors' eyes to buy in the markets, which is Apple. So let's go back to SoFi and let's take a look at the short interest, because that is also going up. We could see 19.58% short interest of free float, 121 million shares that are sold short, cost to borrow max of 2.32%, and the share utilization is 96.43%. Days to cover at 2.74. So if we do see a bullish earnings coming on March 1st, which I think we will, and I think we will get really good guidance coming on March 1st, you could see a short squeeze based off of that. This indicator right here, days to cover, tells you it's hard for shorts to get out of their short positions. If they all wanted to purchase every single share that would be bought in a given day, it would take 2.74 days to exit out of all of their short positions, not even to mention FOMO buyers or new investors that might purchase the stock. So very interesting right there. You guys should be very bullish about the possibility for that. But as we do know, you're not bagging on a short squeeze with SoFi. This is a different animal, a different beast. We're in there like swimwear until we hit our price targets. But like I said, we did break under $10. So I, made a video a couple days ago going over how we could hit $8, and it wouldn't be SoFi specifically that, the business is doing bad. It's the fear that is in the markets that could cause that. And that's a huge buying opportunity. If you could get SoFi at $8 per share, that is 50% lower than the lowest Wall Street price target that is at $16 per share. So that would be a phenomenal return. That would be a 100% return if you go from 8 to 16. That is the time to buy the dip, baby. And that's exactly what I plan to do. MACD has turned bearish. You could see the 20-day simple moving average is at $11.96 per share, and that's following our resistance level to a T, and we're gonna have to break out above that, but we're gonna have to first see the Russia-Ukraine drama go away and a positive PCE number tomorrow. So that's really the situation here. Volume on SoFi is still elevated. It's back and forth. It looks like a literal wave right here. So does show more increased attention to SoFi, but all in all, I've not really done anything with my position. Still own 425 shares and then another 200 shares in another brokerage account worth about $6,000, down about 30% right now. Looking to keep averaging down on that. Have not purchased any options. If I do, I will keep you guys informed. So that's why you want to hit the subscribe button, hit the like button, and get yourself some free stock. Link down below in the description of this video. Thank you guys for watching, and I will see you in the next one.